Hey, what's up, everybody? I'm Dan Lohmar, CFP professional with United Wealth Management, where we specialize in PRAP management and financial planning for pilots at United Airlines. Welcome to another video. Right now, we are talking about PRAP contributions in 2026. The IRS, the new limits are out there. How much we can contribute, how that affects spillover, things like that. All those numbers are out there. Plus one big change, and we're going to talk about that. That's what we're talking about today. Hey, if you haven't done it, remember to like and subscribe if you haven't done so far, and share this video. Those who are not watching it are probably the ones who need to watch it the most. So help me get the word out. Post it on Facebook, on LinkedIn, on the forum. I haven't been posting on Facebook or the forum a whole lot lately. So help out all our fellow pilots and share this video as much as possible. Before we get going, hey, just remember this is not tax, legal, or investment advice, so use it at your discretion as to how you see to fit your financial situation. And then last but not least, before we get going, remember this, I'm recording this in December of 2025. So if you're watching this in a future year, hey, the numbers are going to be different. Most of the laws will be mostly the same, but they could be different also. Just kind of keep that in mind. Most of the concepts should be the same for the most part. So anyway, what we're going to talk about right now, it's a good time of year to talk about PRAP contributions because, again, we have to make an election. If you want to make a change to your PRAP, your contribution elections, and you want those to be effective January 1st of 2026, those changes have to be made before December 11th. So that's about 7 days from right now. So it's a good time to review those, and then also just to see what changes are coming out there and stuff like that. We're going to talk about all types of contributions in there: post-tax, pre-tax, Roth, what PRAP cash is, how spillover works, and things like that. What we're not going to talk about in this video is pre-tax versus Roth. So we're not going to help you make this decision whether that should be pre-tax or Roth. That's a whole nother discussion. And we're going to talk just a little bit about this CBP election that we have going on right now. The election for that isn't due until December 31st, but I'll talk a little bit about that, but we're not going to go into great detail. Alan and I are going to put more guidance out about that next week. So the big change in 2026 is that all catch-up contributions have to be Roth. So you can contribute up to $24,500. And those can be either pre-tax or Roth. But the big thing is once you go over $24,500, they have to be Roth contributions. There's no choice in that. And then what they'll do is if you have your pre-tax, if you're making pre-tax contributions and you hit that 24.5, my understanding is that within the PRAP site itself, or those folks will administer it, is they will automatically switch those over to Roth. Now, if you don't want to make Roth contributions for catch-up contributions for whatever reason, I don't know why, that may or may not be, but if you don't, then you have to go in there and turn those off manually. So again, this is kind of what it looks like on our contribution website here, is that you would make your pre-tax elections here. And again, those should automatically switch over to Roth once you hit the $24,500 limit for 2024. Will it show up here? I don't really know for sure if it'll show up here or if it'll stay, whatever a percent or a dollar amount you select here. I'm not sure about that. And then I always like to point out for voluntary post-tax contributions, and I'm going to get a little bit more into this as to what they all are, but I always like to point out, as long as I got this graphic up here, hey, if you're going to make voluntary post-tax contributions, we like to have this automatic in-plan Roth rollover turned on because that way once post-tax contributions hit the account, they automatically get converted over to Roth. I'll talk more about what all that stuff here is in just a second, but we always like to make sure that it's turned on. Now, the caveat to that is if you haven't turned this on before, you have to read some documentation and just say, hey, this is potentially a taxable event, because if you have any post-tax money in there that has gains on it, the gains on that amount are taxable. So it's just something to be heads up there on right there. So I already mentioned it, changing elections, if you want them to be effective January 1st of 2026, has to be done before December 11th. So that's about 7 days from right now. And then I always like to mention this, that if you're going to make changes in the middle of the year. There's no really hard set guidance as to when those changes have to be made to be effective by a certain pay period. They just say it takes 1 to 2 paychecks. That's all there is. Generally speaking, if you do it by about the 13th of the month, it'll be effective for the first of the month of the following month. That's about all I can tell you. It's not, there's no real hard, fast guidance on the time frame of changing elections. So let's talk about the numbers themselves, what have changed for 2026. The annual compensation limit is $360,000. Yeah, for 2025, it was $350,000, goes up $10,000 next year. This is often referred to as the 41817 limit. And I point that out because a lot of people will use this number when they talk about this. And what this number is, this is an important number because it has a lot to do with this cash balance plan election that we have coming up. So just so you understand what this means is that United cannot put a contribution into the 401k that's associated with income above $360,000. Okay, so they're going to put 18% all the way up until your year-to-date income hits $360,000, and then they can't do any more with it. They can't. Let me rephrase it. They can't put it into the PRAP. Okay, so that's why that number is important. We're going to come back and revisit that a little bit more when we talk about this. But that's why that number is important to know. For elective deferrals, which we just frequently just call personal contributions, you can put pre-tax and or Roth in there up to $24,500. For catch-up contributions, this is something that's new. This started last year. There's actually 2 age frames here. So for catch-up contributions, if you're 50 to 59 or 64, you can put $8,000 in catch-up contributions. And like I said before, this is the big change, is catch-up contributions are Roth only going forward. If you are 60 to 63, for some reason they carved out the years there, and you're allowed to put in a catch-up contribution of $11,250, and again, Roth only as far as that goes. So total contributions into the PRAP as either pre-tax or Roth. Total contributions in the PRAP, if you're under 50, $24,500. If you're 50 to 59 or 64, $32,500. And if you're 60 to 63, $35,750. Now, that applies to only pre-tax and or Roth contributions, okay, including catch-up. So we have this other thing in here called post-tax contributions. And there's no limit per se on post-tax contributions, okay? And you can make post-tax contributions at the exact same time that you can make pre-tax or Roth contributions, or you can turn them on later in the year. It's up to you. I find it easier just to do them all at the same time. But post-tax contributions, there's no limit per se on those things. And so remember, these limits, $24,500, $32,500, or $35,750, those limits only apply to Roth or pre-tax. So we can make post-tax elections. And I'll talk about, I say there's no limit, but there is a limit on how much can fit into the PRAP total. Okay, so what else? So maximum the company can put in there into the PRAP is $64,800. And how do we come up with that amount? Well, they put in 18% starting in 2026. Okay, well, the most that they can put in there as far as related income is $360,000. So if you took 18% of $360,000, it's $64,800. That's the most that they can put in there. After that, it flows into either the HRA or the what might be cash balance plan. I won't get into that right now. But after that, it flows, and right now, in 2026, it flows into either the active HRA or the retiree health account. One of those two, depending on what medical plan you're on. So let's just talk about the total allowed into the PRAP in 2026. If you're under 50, $72,000. That's including your pre-tax or Roth, your post-tax, and United contributions. All those can add up to $72,000. And by the way, this is actually the number that actually creates spillover. So that is the number that is the same for everybody because we're always allowed to make catch-up contributions in there. And so if you're making the total amount you make in 2026, if you're 50 to 59 or 64, is $80,000. And if you are 60 to 63, you can put $83,250. So one thing I said too is spillover actually starts at $72,000, and we're always allowed to put those catch-up contributions in there. So that's just something to keep in mind. All right, so let's look at contribution types. There's 3 types of contributions we can put in there. We can put pre-tax, we can put post-tax, and we can put Roth. Pre-tax and post-tax, they go into the traditional 401k. And the traditional 401k is the money goes in there before it's taxed, right? Okay, now when it comes out of retirement, it does get taxed. Okay, so where's your better tax strategy? That's for you to decide. We're not talking about that today. So anyway, money goes in pre-tax. Post-tax money goes into the traditional 401k. Now, post-tax money is unique in that it can be converted into the Roth. Okay, so we've already paid taxes on it. It's after taxes. And so once it goes in there, we have something called an in-plan Roth conversion. And that can be converted over to the Roth. And there's no gains on that money. It's a tax-free transaction. And that can end up in the Roth 401k. Now, if we make a Roth election, obviously that goes directly into the Roth 401k. United contributes 18%. For now, it always goes into the traditional. So it's not taxed when it goes in there, but will be taxed when it comes out in retirement. And so there's a potential for that to change in the future where maybe United could put Roth contributions in there, but we won't worry about that right now. So these are the different contribution types. Now, we actually have 2 401ks in our PRAP. We have a traditional 401k, and again, that's pre-tax money goes in, it gets taxed when it comes out in retirement. Roth money it's taxed now out of your paycheck. It goes in there after taxes, but then when it comes out in retirement, it's tax-free. Now, people say, well, where's my Roth 401k? Where are these different 401ks? There's not if you log on the PRAP website, there is not hey, this is your Roth 401k, this is your traditional 401k. It's all commingled. But there is a way to tell what's what, and that is if you go onto your PRAP website and look at this tab called Contribution Types, it will break all these down. And it will say, hey, this is your B plan, C plan. These are your pre-tax elected deferrals, your pre-tax rollovers, so something that came in from another plan, voluntary post-tax Roth conversions. So again, that's money that went in post-tax, it got converted right away. That's Roth elective deferral, so that's money I elected to put in as a Roth contribution, and then unawarded for vacation forfeiture. And there might be a couple other rows here for you, depending on your situation, but it will just break it down as to what account, what percentage of your overall account, what the balance is in each one. That's how you can tell between these two. That's how you can tell how much Roth money you have inside of your account. But there's no place that says, hey, I've got a Roth 401k or traditional 401k. It's all just kind of commingled together, and it's tracked by Schwab by doing this. I won't talk much about investment options, but if you're new to the PRAP, you kind of have 2 investment options as they come in. All contributions come into the core funds, whether it be a money market fund or, there's a select choices of mutual funds in there you can choose from, or autopilot or target date funds that are managed by themselves, whatever. Or you can transfer some of it into the PCRA. The PCRA is a personal choice retirement account, and that is something you have to open. It's not open for you automatically, and then you have a lot more investment options there as to what that is for. It's more like a regular brokerage account. All right, that's all I'm going to say about investments. The one thing I'll say too is, before I get into Roth 401k versus Roth IRA, they're not the same thing. I hear all the time, oh, I didn't think I could contribute to a Roth 401k or a Roth IRA because they make too much money. They're cousins, but the tax structure is the same, but there's different rules that apply to them. So just if you make $400,000 or whatever at United, even though that would be too much to make a direct contribution to a Roth IRA, you can still put that money into the Roth 401k or make a Roth elective deferral. So just keep in mind, they're not the same thing, and income limits do not apply to Roth 401k contributions. So this is what it looks like, and this is kind of lead up to how spillover works. We've got contributions coming in here from the pilot, pre-tax or Roth. I kind of think of this as filling it up from the bottom going up, because eventually we're going to create some spillover here. But so pre-tax or Roth, and this is if you're under 50 right now, so you can put up to $24,500. You can fill that bucket up, and then you've got the ability to put in post-tax contributions. Again, you can do this at the same time. You do not have to wait for this to be filled up anymore. You used to have to, but now you do not have to. So post-tax contributions can go in there at the same time. Keep in mind that if you have, let's just say you have 10% pre-tax and 10% post-tax, your combined contribution is 20%. Keep that in mind if you're doing that at the same time. Post-tax contributions go in there. All this thing kind of fills up, and basically company contributions kind of come on top here. So the most that can go in the PRAP if you're under 50 is $72,000 in 2026. If you're allowed to have catch-up, so you're older than 50 in these age brackets, same thing. You put in pre-tax or Roth contributions up to 24.5. Once you go above that, they're automatically going to be Roth contributions. Your catch-up contributions are. This is what your limits are again: 32.5 and 35,750 with catch-up. And again, you can put post-tax contributions in there at the same time. If you want to, or you can turn them on later. So those things can go in there. And then basically, the maximum you can put in there, depending on your age bracket, your age bracket is for catch-up is 80,000 or 83,250 if you are 60 to 63. So that's those kind of how it fills up like that. Now, how does spillover work? The other thing about it too is as you kind of think about your contributions filling up from the bottom or the top, United's putting theirs on top also, right? So this whole thing is kind of filling up from the bottom to the top. Once you hit your upper limit, whatever that may be for your age bracket, once you hit that limit, all contribution types are stopped. That's automatic. So a lot of people ask me, hey, do I have to monitor this throughout the year, and do I have to turn these off once I hit these limits? Nope, it's done automatically. Now, every once in a while, they'll put extra in there, and then they have to go through this administrative exercise to kind of get the money out there and stuff like that. But for the most part, it's automatically stopped. So nothing you need to do to stop those. And then what happens is if it is full and you reach those limits, your PRAP contributions automatically go to zero. You'll go back to your PRAP contribution page and it will show zero. And a lot of people go, oh, why are my contributions zeros? Because you're probably maxed out. And then usually starting around December 5th is they will turn them back on. So here in just a couple of days, probably tomorrow, they'll turn them back on and they'll go back to whatever they were before, and so that they're ready to go again January 1st. So if you want to make changes, you can still do that. All right, so this is what spillover looks like. Once you hit $72,000 in contributions, so again, that's all of your pre-tax or Roth, all of your catch-up contributions, all of United contributions. Once those hit $72,000, that's when spillover happens. Okay, and so United has no more can fit into the 401k based on IRS rules. So United still has a contractual obligation to put 18% of your salary somewhere, and it flows into the health reimbursement arrangement or the RHA, either one of those two. Now, something people may not know is you're always allowed to put catch-up contributions in there. So let's just say you hit $72,000 later on in the year. and you realize, oh, I missed my contributions or whatever, hey, you're always allowed to put your catch-up contributions in there. So that's something that is not commonly known. So that's what happens. Now, I'll mention just a little bit about this cash balance plan, because right now, as it stands right now, our active HRA or RHA spillover, in this situation, is all driven by contributions to the PRAP. Okay, when the cash balance plan happens and we're maximizing contributions to the PRAP, the spillover into the HRA or RHA is no different. Okay, so that spillover into the cash balance plan potentially does not apply until income is above 360. So just keep in mind, a lot of people ask about this $10,000 COP spillover and stuff like that. The way it's set up right now is you can still have a lot of spillover into the HRA or the RHA. So let's talk about that. So let's talk about PRAP cash, okay? Because this is another thing, is that a couple years ago, once we started seeing retiree health account balances getting pretty sizable, we thought, hey, all right, what solution can we do to this? So what we did a couple years ago is we said, all right, we're going to limit the amount that can go into the retiree health account that is based on income above $360,000. It's not capping $10,000 based on your contributions. It's based on income above $360,000. So that was just a method, kind of a short-term method to kind of put a Band-Aid on this excessive spillover into the retiree health account. So it limits compensation spillover due to compensation to $10,000. It does not limit spillover due to personal contributions. And again, this is temporary, and we're expecting the cash balance plan to go into effect in 2027. And at that point, you would have the choice. Do I want spillover due to income exceeding 360? Do I want it to go into the cash balance plan or the RHA, or a combination of? That's to be determined. But that's the whole point of it. That's the way it is right now. So again, future cash balance plan only applies to income above $360,000. If your income is not above 360, it's no, and you have a choice. You either go into the PRAP, or if the PRAP is full, it goes into the active HRA. Income is above 360, yes, then you have the choice. Do I want to go into the active HRA or the CBP? Again, this is getting a little bit down the road, but again, that's the essence of the cash balance plan down the road. So how does PRAP cash work right now? $360,000 compensation is a compensation limit. United cannot put any more money into the 401k. They're going to limit this to $10,000. And how do they do that? Basically just means that once your income hits in 2026, 415, 556, then your United's 18% contribution starts coming paid to you as PRAP cash. Okay, how do they come up with this number? Well, the difference between these two is $55,556. Multiply that times 18, and it's $10,000. So once your income hits 415, 556 or above, again, you start getting a little extra pay. Of course, it's taxable income. All right, so here's the next big question: is a lot of people say, well, how do I limit spillover into the active HRA or the RHA? How do we limit it? Okay, so you can still do it. So basically, all you're doing is you're filling up the difference between how much room is allowed in there and what United's going to put in. So in this situation, if you're above, and this is mostly the high earners making above 360 that are concerned about this. If your United's going to put in 64,800 no matter what, or I shouldn't say no matter what, because again, it won't, if it doesn't all fit in there because you're making high contributions. But again, if you're concerned about spillover, they're going to put $64,800 in there. That's 18% of 360, the compensation limit. And basically what you're doing is with personal contributions is you're just basically, how much can you put in there without adding to spillover? Well, if you're under 50, You can put $72,000 in there, $7,200 in there. If you divide that by 24 pay periods, it's $300 per pay period. All right. If you're 50 to 59 or 64, you can put $15,200 in there, $633 a pay period. If you're 60 to 63, you can put $18,450, and that is $769 per pay period. Obviously, that's 24 pay periods. If you miss one, you'll have to make some adjustments there. But that's how much you can put in there without creating additional spillover due to 401k contributions. If you are not making more than 360, it depends, because we don't know how much you make. It's driven by hourly rates, hours flown, what your full year compensation is expected to be, because if it's the less you make, the more room that you're allowed to put more money in there before spillover happens. So that's a variable there that we don't know for sure. You just have to do the math as to how it might play out for you. What we used to talk about a lot, we seem to be talking a lot more now about minimizing spillover in situations. There's still a lot of people who are making mega contributions trying to maximize spillover. But if you want to maximize your spillover into the retiree health account or the active HRA, you want to kind of maximize your contributions early in the year. That's gonna put you're gonna fill up your portion, your pre-tax, your Roth, your catch-up, your post-tax. You're gonna fill that thing up as soon as you can in the year. And basically what it's doing is it's squeezing out United's contributions, so that the sooner that's done earlier in the year, that means that many more months they have to put 18% into the retiree health account. And so that's how that is done. There's the mega contributions. And as far as like just demonstrating what that looks like, I've got some other videos out there. I'll put the link in the show notes here as to what that looks like. They won't be using 2026 numbers, but I'll have some links in there from previous videos, you just kind of demonstrating how that works. So that's it. A lot to talk about. There's a few changes there for 2026. I haven't done a video for a while. I thought it was a good idea, just kind of give a whole overview of the PRAP. Talked about not just the limits there, but a lot of different factors in the PRAP. But that's it. Hey, if you're a client, you got questions, please reach out to us. We'd be glad to help kind of run over those scenarios for you and see what works for you. And if you're not, or if you are, hey, if you like this video, please give me a thumbs up, and remember to share this video with our fellow pods. Those who are not watching it need to watch it the most. Appreciate you guys tuning in. Until next time, fly safe.